Hello, everybody. Welcome to the November 10th edition of This Week in Crypto. I'm your host, Brian. I will be flying solo today and have a lot to talk about. As you would imagine, looking at the past week and exactly how scorching hot, I guess I could best describe it, the altcoin markets have been. Price returns have been soaring for the vast majority of assets. I wanted to start by looking at the 30-day returns, which are obviously through the roof pretty much for every asset here. Among the top, I would call this 60 or 70 assets or so. And if I switch this over to the 7-day, yeah, it's looking pretty much the same ratio of green all around. There are a few standouts, of course. You can see FTT more than doubling, close to tripling at plus 181%. Hard to speculate exactly why that's happening. FTT is, of course, the native token of the bankrupt FTX. Who knows what's going on behind the surface with the some sort of attempted relaunch going on. I'm not sure how much the community would trust it, but that's for you to decide. We can see Caspa here returning plus 74% just over the past week. Plenty of others as well. OKB, another native token. This is the native token for OKX, up 33%. Chainlink up 32%. Solana up 24%. Even Ethereum at plus 15%. It may look kind of unassuming among this chart, but it surpassed 2130, which is just inches. I believe the high back in what was it, July or June, that was was like 2131. So, UTA traders out there who really believe in support and resistance levels, this was an example of what appeared to be massive sell walls right at that level of the previous high that we had seen earlier this year. If that high gets surpassed, the theory is that Ethereum could really climb fast, gain another 10, 15, 20% like that, because there's no more resistance level blocking its price right around 2131, 2132. So that could potentially be something right in the foreground for Ethereum, assuming this market continues its momentum forward, with particularly the altcoins just taking off. And that isn't something that was exclusive to this past week. We've seen altcoins performing extremely well pretty much since, I would call it early October, but especially going into the third week of October and beyond, for pretty much the last 3 weeks or so, almost 4 weeks now. We've started to see price action that hasn't existed since March, and before that, it hasn't existed since the all-time high month for Bitcoin and Ethereum back in November of 2021. So this is something that's pretty historic that's going on. And for those who watch every week or close to every week, we don't often say that. We use those words pretty seriously when we talk about whether a milestone is occurring. And of course, the question is why? What exactly is causing these crazy breakouts to happen right and left? And the easy theory, and likely true theory more than anything else, is the optimism going on with ETFs. Now, if you polled, 100 random traders on why these ETFs are so important, as a weird page opens, sorry about that. I think I just clicked a button on accident. If you polled them, I think that a pretty large ratio would say, I'm not sure why the ETFs are so important, but I know that once they're approved by the SEC, it's really bullish for crypto. That's correct. Of course, we know that ETFs are going to be a big part of crypto's growth once they are approved, assuming they are approved. We still have yet to see them approved, mind you, even since the fake news came out close to a month ago with Cointelegraph accidentally posting that the iShares ETF had been approved by the SEC. But regardless, the ETFs are mainly a great thing for crypto's future, theoretically, because of the fact that it increases exposure for all sorts of new traders to come into the space, um, make investments, purchase crypto without actually having to go the traditional route of, getting on an exchange, owning the actual crypto, owning a hard wallet, learning too much about what ownership of crypto entails. They can simply go through ETFs, which fluctuate along with the price of assets like Bitcoin and Ethereum. So they can get exposure in a safer way for them, uh, and not have to feel like an expert in crypto or feel as nervous, as maybe others do by holding crypto on actual exchanges or even in self custody. If you are someone who owns crypto and exchanges or self custody, maybe you think it's no big deal. It's certainly not the hardest thing to learn or be comfortable with, but I still think there is a barrier for people who um, perhaps do not want to go that route. Maybe it's illegal in their country. Maybe it's something that they just have never fully trusted or wanted to learn about. So the ETFs essentially can create a lot of new traffic, new traders, new entries into the space because of the fact that there's a new route and a new method for investing, and having exposure in this sector. So the reason that's important and the reason I bring it up is because there has been some new news. Just in the past 24 hours, BlackRock is now, or has officially registered their iShares Ethereum Trust in Delaware, with the presumption that their Bitcoin ETF that they applied for, months ago now, will be approved soon. And that's big because a lot of people see this as a signal that the approval of the Bitcoin one is now inevitable. Um, this is a pretty popular handle on Twitter. Will uh, Clement the third, who has close to 700,000 followers, so naturally a lot of people gravitate to what he says. And he says, I think it's pretty obvious that if BlackRock is filing for an Ethereum ETF, then the Bitcoin ETF must be a done deal. And I think this is a very common notion, and it's something that is um, not just his mindset, but multiple people's mindsets believe that it's pretty inevitable that this ETF is around the corner. And of course, regardless of the Ethereum ETF, even just one ETF is essentially the signal that the rest can break through the floodgates pretty quickly. So, with that said, price action has been fantastic. We know that a lot of that is attributed to optimism surrounding ETFs. Now, keep in mind, this is certainly not investment advice, but uh, upon any sort of approval of an ETF, assuming it happens, there will be a certain layer of price already being baked in. Oftentimes, you hear the hype about something for months and months, and then it finally happens, and the presumption is that things really take off. And realistically, based on history, what happens is, yes, there will be a slight surge if and when any ETF is approved, followed by a bit of a letdown period. And everyone's going to go, why is Bitcoin not automatically at 50, 60, 70K now? Well, to a certain extent, this has the potential, I should say, to be a buy the rumor, sell the news type of scenario where everyone gets super hyped. The majority of people don't actually know why well, I shouldn't say that. I don't want to underestimate people, but the ETF lacks maybe a certain comprehension from the average trader still. And I think all of this said, there could be a scenario, and I think maybe even likely scenario, where there, once it's finally approved, yes, there will be extra exposure and new people entering the space, but it might not be to the level that people thought. And even if it is to the level people thought, there will be an element of the price already being baked in, based on, you know, Bitcoin's constant surge over the last, not the last few months, just the last 4 weeks or so, I should say. going up to 37K, and altcoins, tons of altcoins more than doubling now in the past month. Um, Even when it's approved, there is, an argument to be made that prices have already surged enough. And if it is not approved, that's worrisome. Like if there's actual news coming out saying after a long debate, the SEC has decided to not move forward with these ETFs, citing that it is unlawful or whatever they say, that would be that could be really bad, and we could see a very quick crash because there has been months ever since June. Now we're talking 5 months or so now, months of anticipation that this was an inevitability and that we would see these ETFs really provide an outlet for new traders to enter the space and invest and get exposure to crypto in new ways that we have not seen before. And obviously, here in the US, there is a very big impact that this country has on the rest of the crypto markets, even if you're in Taiwan or Russia or Czech Republic, doesn't matter where you are in the world, uh, there can be an impact that has ripples all over just from the US's decision, just as the US's decision with the interest rates have impacted the markets for so long. So I think we need to wait and see. In the meantime, what we'll try to do today is look at how overheated or not overheated the markets are, and whether this, based on where we are now with still unconfirmed news that an ETF is approved, how much longer can this rally go? Because this has been pretty momentous. It has been uh, basically the altcoin rally that many people have waited for. I've seen tons and tons of posts about how altcoin season has arrived. Optimism, as you would imagine, is high. People are more bullish than they are bearish. It would be a shock if there was anything otherwise based on these price performances. I still think there's at least from some of the bigger, um, longer standing traders out there and large influencers who are really heavily regarded for their opinion, there's still a little bit of cautiousness. I'd call it kind of cautious optimism. And that's kind of the stance that I think we at Santiment have. Yes, there can absolutely be another week or two or even 4 weeks of rallying. Who knows? Maybe going all the way through the end of 2023, even if news for the ETF stay as it is. Um, but when we'll look at MVRV here shortly, we'll see that yes, there's a lot of overheating. The average asset certainly looks overbought based on average trading returns, and uh, regardless of what your take is or even what our metrics show, it is not the worst idea to skim a bit off of your profits, assuming you have some nice profits. Uh, there is pretty much every investor out there who has been in the space for a long time has been through cycles, whether it's crypto or investing in gold and silver or the equities markets. When you see this kind of scorching run, they'll tell you, it. I wish I took a little bit of profit before there was some correction happening. And of course, I say not investment advice because look, we could see altcoins double again between now and December. It's happened before. We saw the November 2021 all-time highs when metrics were already showing that prices looked like they were slowing down and should slow down 2 or 3 months before that. The rallies often go a little longer than the average trader or even expert trader expects, just like the crashes go longer than many expect. So that's enough rambling. I think we can get into the numbers now. That's kind of where we're at with the markets, and I want to show a few other things on the social end as well. Um, Pretty much the majority, well, I should say, yeah, most of these top six, top eight keywords are related to U.S. policy and what we can expect in terms of their impact on the markets, speculation on approving ETFs. I want to note this: the Fed chair in the U.S., Jerome Powell, issues a warning about the war against inflation and markets crash. Uh, Powell responds to climate protesters, disrupting his speech by saying, "Just close the effing door." I think you know what effing means. Uh, so there's some controversy. You can see 38K. This is a telltale sign that maybe we're hitting a top because of the fact that traders start to trend that price level that is just within reach, whatever the next uh, psychological support or resistance level is. If there is too much talk about it, it often does not get there until the anticipation for that price level dies down. So right now, 38K is trending. Of course, Bitcoin has not hit 38K yet. It's gotten close. It's currently at this time of recording, 37.2K, and kind of fluctuating, kind of flattening out right now. But who knows? By the end of the day, maybe it gets hit anyways. I'm just letting you guys know. Usually, when psychological resistance levels are trending like this, it's because there's a little too much FOMO and people thinking that it is an inevitability for that price threshold to get hit. We can also see on the midterm trends, check out this big spike in the mentions of bull market, really spiking hard, whereas bear market, not so much. Bear market's kind of, trending down as you'd expect, whereas bull market arguably is getting back to the same levels it was seeing earlier this summer. So that's kind of a very rudimentary indication that people are becoming more optimistic. Um, as for the other trends, I'm not really seeing anything, maybe an uptick in curve drama, which is interesting. And then on the trending tokens side, look at Ethereum here. And we know why. This is all related to the new filing from BlackRock related to the ETF and the expectation that it should be approved once the Bitcoin one is approved, with many people believing why, BlackRock would not have filed in the first place unless the Ethereum one was approved. And now we see exactly why Celsius is the I'm sorry, not curve drama is trending. This is Celsius, so I take that back. But look at how Celsius is at the number 2 spot due to failed crypto lender. Celsius Network has been cleared to exit bankruptcy and start repaying customers in January. Courts approved Celsius's bankruptcy reorganization plan with $2 billion in crypto going to creditors. So yeah, that's pretty good news. I can see why Celsius is trending. Of course, it had a big downfall, I think a little over a year ago now. Feels like less, but I think it really has been that long. It was before the FTX collapse. Bitcoin at number 3. So note that Ethereum's the number 1 trending and Bitcoin's the number 3 trending. So lots of discussion relative to usual for the top 2 assets in crypto. Lido DAO is trending in the crypto and finance area, as mentioned in tweets discussing the performance of Ethereum and its beta. Okay, so this is all just related to price. FTT is trending because it refers to FTX token, as we established. The recent trend in FTT could be due to increased interest in FTX and its token, possibly driven by new developments. So somewhat of a generic explanation by our AI bot there. Dogelon, that's an interesting trending token right now. I've seen it in the news a bit the last couple days. Justin Sun wants to buy at a cheaper price. There was a hack on the Poloniex exchange that held Elon, and people are discussing whether Elon will be a top 30 token. Some are requesting the CEO to refund Elon from Poloniex and buy more Elon. Yeah, it looks like the main discussion around it is related to the Poloniex hack. And also look at the OG coin Neo. This one's been around at least since I started learning about crypto back in 2016, 2017. And it's trending because users on Reddit are discussing the process of converting gas to Neo using the BNEO token. So in short, this is a trending token because it's been pumping quite aggressively over the past week. I believe, yeah, here it is. It's only plus 30% over the past week. I think it looks better. Yeah. So it's essentially doubled in the past 30 days. One of the better performing altcoins out there. But obviously the story over the past week has been altcoins in general and their uh, rises all over the place, fireworks going off, a new surge happening here, a new surge happening there. And often the signals, something that signals the top of the markets overall is when you start to see a lot of speculative assets, especially ones you've never heard of. Maybe they're even outside of the top 500 or so. And you just see huge pumps while Bitcoin is basically just doing this, or maybe just a slight climb here and there, but obviously not matching the market double ups that are happening for many assets out there right now. And I think that's going on to an extent. You all remember, the various Dogecoin rallies and other assets that maybe have never been discussed at a mainstream level that are suddenly just the talk of the town. And when people are asked why, they just say, I don't know, but it's pumping a lot, right? So all I'm getting at, regardless of where prices go next, is there's a lot of optimism and a lot of speculation that the bull market has arrived. And based on our metrics, which we're going to get into now, it's debatable whether there actually is a justification to say that a bull market has arrived, because on-chain activity is not quite exciting enough for us to say that there's this sudden increase in utility. Um, we're not, obviously the ETF has not been approved, despite everyone acting as though it's an inevitability. Uh, MVRVs are sky high, funding rates are sky high. We'll just transition right into it now. But in short, I will definitely say that on-chain activity for the top assets like Bitcoin and even Ethereum, they're not showing huge notable rises like would normally be the case for you know a long-term bull run or bull market now being in in full swing. So let's look first at the trading volume and transaction volume for Bitcoin. It is clear, this contradicts what I just said. It's clear that transaction volume is up, right? We see trading volume kind of more of a modest rise, but looking at transaction volume, if I add, we'll even just say a 7-day moving average, it was really starting to pick up at the end of October. Let me do a refresh because there's a few recent days missing. There we go. Yeah, so even this spike, this was yesterday. This was the second largest day of on-chain transaction volume with over $15.6 billion in Bitcoin on-chain transaction volume, only surpassed by the spike on October 24th, right after this surge happened and prices started to flatten out. So that's a good thing, regardless of whether it's indicative of a ton of profit taking or not. More transaction volume, more utility of any kind is good for the long-term prospect of Bitcoin. Moving down, we also see a big circulation spike. This is the largest spike in unique tokens moving on the Bitcoin network since going back to late July. It's a top 10 day in the past year, and address activity is more on the so-so level. You can see that it was rising up until November 4th, and then it kind of dropped back down a little bit. So I'd call this lukewarm, especially with the circulation spike that just happened. You can even see here on our NVT model, this is measuring the amount of circulation versus the current market cap of Bitcoin, and it's showing a neutral signal so far in November. This is after a semi-bearish signal that happened in October, which was a good sign because we've seen basically nothing but red since August of 2022. And now all of a sudden we're getting different colors that are showing at least an increase is happening. Maybe we're not in semi bullish or bullish territory yet, according to this model, but this long-term model has notoriously been pretty accurate. You can see when it signals breakouts once it gets into bullish and signals bearishness. It's not always right. We had this second top here and the inevitable all-time high, even as This model was showing semi-bullishness, but yeah, we're at least showing signs of this dead bearish red zone starting to wake up. And I'm very curious to see if it stays yellow, maybe even gets toward semi-bullish territory by the end of the month. And of course, you can download it. This is among our many models out there where you can check on the health of not just Bitcoin, but many of your favorite assets. We've got Ethereum, Matic, Litecoin, Chainlink, Ren, Augur, and XRP among the assets you can look at. So going back here, circulation's looking much better. Address activity is kind of still a little bit stuck in the mud there. I'd like to see that improve. And then MVRV, as I mentioned, the average trading returns for addresses that have been active in the past 30 days on Bitcoin's network is at plus 9.9%, which is somewhat high and a bit of a concern, but it's also not in a danger zone yet. So there could be room to run. We've seen plenty of occurrences just over the past year where the 30-day MVRV has surpassed 10 or even 15%. We usually gauge around 15% as the danger zone for Bitcoin. That's where you typically start to see tops going on. But just remember that every percentage above zero means there's increased risk compared to the average moment in crypto for you to add on to a position or open a new position. On the other hand, 365-day active wallets are looking extremely high. This is actually the highest it's been over the past year, with average trading returns sitting at just a little above plus 38%. That's a bigger deal because it's showing that on the long term, for a metric that normally sits at 0%, it's up 38%, which is in the top 3 to 5% based on just looking at the charts over the past 5 years or so. Let me see if I can get it. It might be a little bit too long term. Let's just do the regular MVRV instead of an intraday, since we're going really long term here. There we go. So yeah, if you look at this red MVRV's line right here, this plus 38% is the highest we've seen since the all-time high month, November 3rd. It was pretty much right at the top, right? Or at least the second top. This was when it was at 65K in early November. So we're talking about 2 years ago, almost exactly 2 years ago, being the last time that Bitcoin's average returns for long-term traders were this high. Now you go back before that, it was really ballooning in the months following Black Thursday, back when COVID was first hitting the world and causing, all sorts of havoc and strange anomalies in all markets. It was much higher back here, but this was a big anomaly, as was this one in June of 2019. Other than that, this is a pretty historic spike for long-term MVRV. So keep that in mind and be careful. Now, zooming back in, let's go last 6 months. The funding rate for Bitcoin is also very notable right now. You can see there's been lots of longing going on. Open interest is up. People are putting their money where their mouth is. So if you're wondering if, social media is just pretending to be optimistic, the answer is no. They really are optimistic, and they are opening longs and putting leveraged bets on Bitcoin, expecting it to continue rising. That's usually a caution sign. We saw the last big spike here in mid-August, right before the crash. Generally, these kinds of red spikes occur when there is room for Bitcoin to grow, and there is basically the expectation is when there's a lot of shorting going on, even in the midst of longing at the same time. We saw a healthy mix of both throughout this stretch here, but the healthy amount of shorting happening really helps Bitcoin move up with increased velocity and essentially acts as rocket fuel for prices to rise. And without those shorts, which we can see there's almost none, you can squint and see a little bit of that dark red there back at the turn of the month, but pretty much nothing now. That would be a sign that we could continue up. But right now, that rocket fuel is gone. So if prices are going to continue to grow, it has to be from new money coming in, more whale and shark accumulation, which we'll get to momentarily, and at least one of the bullets that Bitcoin is relying on to continue climbing doesn't appear to be there right now. So that's another thing to be cautious of. Now, as far as whale transactions, this is another caution sign. Increased whale activity over time is certainly a good thing. More focus on accumulating prices and stuff, that is absolutely helpful. But when it's occurring, when you see a sudden spike like this right after another big leg up, that's usually the sign of profit taking. And we'll look at the context of this whale transaction spike in a moment, but you can see this is the largest spike, just about 16,000 transactions that are valued at $100,000 or more happened yesterday. And this is the largest spike in at least the last 6 months. We can go back to the last year and see that it is the largest in at least the last year. If we go back to the all-time high month, yeah, now we're looking at November, just over a year ago, 1 day extra. So basically right at the middle point of this 2-year chart. That's the last time we saw a spike that was higher, when on November 9th, instead of 10th, 2022, we saw 17,000 plus whale transaction spikes, which, by the way, occurred right at this local top before prices collapsed. And we obviously know why. This was right as the FTX implosion was happening, and tons of huge wallets and investors and traders were getting their funds the hell off of that platform, or at least trying to. So here we go. It does look like there could be a potential local top happening that is being caused by the whales. It certainly isn't a guarantee. Like I said, we'll look more into whales momentarily, but I find that to be very worrisome. What is also worrisome is that there's a lot of profit taking happening. The ratio of transaction volume in profit versus loss is showing, understandably, that most transactions are happening while the average transaction is well in profit. And when that happens, there's an increased likelihood of a price correction. It may not be a huge one, but if and when that correction happens, understand that it is likely due to most transactions happening while they're well into profit. What I think is one of the best signs is the fact that this mean dollar invested age curve is really flattening out and even arguably starting to move down. The average age in which investments have sat in the same wallet is 637 days. And 2 weeks ago, a little over 2 weeks ago, it was at 641, 642 days. That may not sound like that big of a deal, but pretty much in every bull run over time, if I go back to, let's say, 2015, we saw a flattening out period followed by a drop in mean dollar invested age. And you can see what happens. They can kind of foretell where prices are going to go next. When you see this line drop, prices surge. Right here, even prices surge during this drop. This was a huge one in October 2020, where you started to see the mean dollar invested age curve go down as prices went up. And I like to look at this metric as more of a validator than anything. It kind of gives a stamp of approval. If prices are rising and you see the curve going down, it means there is a much more likely scenario where the prices continue to go up, because dormant coins that had been sitting in wallets for months or years, they're suddenly, zooming back into regular day circulation, where traders can now move them from wallet to wallet. So more utility, that's the name of the game. If there's more coins moving around, if addresses are able to fire off at an increased rate, that's very good news. So stagnant and dormant tokens are often kind of the trigger point to allow the increased utility to happen. So we're on the verge of that. Granted, this line isn't going down yet. We've seen fake outs before, where there's a flattening out period and then it just resumes rising. So be cautiously optimistic about this, but this would be a very good thing if you start to see this line ticking downward. Zooming back into the last 6 months, understandably, there's some big realized profit spikes, particularly the one that just happened yesterday. Just like the whale transaction spike and some of the other surges that are happening yesterday, this realized profit spike is the largest in over 6 months and the second largest, I should say third largest we've seen in the last year. During both of those spikes, we saw local tops happen. This one was a relatively small one. This one was a bit bigger and it happened right after the spike. So understand that this increases the probability of at least a short-term correction. Doesn't mean it's a guarantee, once again, but it absolutely, based on history, points to it being much more likely to occur. Now check this out. Despite prices continuing to rise, you can see that the supply and exchanges is continuing to fall. We had 6.01% of Bitcoin supply and exchanges on September 6th, about 5 weeks ago. And here we are now at 5.48%. So we're looking at a little over 0.5% more of all of Bitcoin supply moving off of exchanges. Interestingly, there was a huge outflow on November 8th and then a huge inflow on November 9th. These were two of the biggest spikes we've seen in the last year in both directions. So certainly a lot of polarization and people being quite indecisive. I'm sure it's different people causing the outflows versus the inflows, but no guarantee. And the net outcome remains coins moving off of exchanges, which is generally a good thing. It means there is less risk of a future large sell-off since coins are literally less available on exchanges to be sold off. So watch this metric over this next week with your trial or your Sandbase Pro membership to see if coins start to move back on exchanges. That would be a sign that we could hit a local top of some type. For now, on the long-term scale, this looks like more positive news. Social dominance, ignoring the Twitter API impact that happened here in June, we can see that social dominance for Bitcoin is moving down. That's a bit of a concern. We'd like to see that Bitcoin is continuing to be getting a large amount of the attention. And obviously, with so many altcoins stealing its spotlight right now, Bitcoin's getting less and less as speculative assets are getting more and more discussion. So take that as you will, but historically, we see the best rises when Bitcoin's level of discussion is sky high and altcoins are not the talk of the town. You can see weighted sentiment, which I'm starting to have more confidence in again. We haven't used weighted sentiment as much as of late, mainly due to the Twitter API changes that caused some false negative social sentiment here. But this is pretty accurate. I do see that the weighted sentiment is reflecting the amount of positivity and euphoria going on. It's certainly not at the level we saw in March, where it was just through the roof. But just note that we prefer to see this kind of thing. In the last 2 weeks, all of this negativity undoubtedly helped Bitcoin continue to climb, even when many people already thought it was topping, as we can see from the negativity. And now we'll head over to whales and sharks, and we've got quite interesting patterns forming there. So if I full screen this, we're going to take off everything except Bitcoin and Tether in terms of shark and whale holdings to kind of simplify what the story is right now. And right now we're seeing undoubtedly some profit taking from whales. They're certainly not accumulating into the rise like they did back in June. This was all with anticipation of the original ETF announcements that were going on, and BlackRock and others getting a lot of optimism. And of course, this was the second wave of optimism related to those ETFs. But through that, it doesn't appear that the sharks and whales are accumulating more collectively. They're actually kind of taking quite a bit of profit with anticipation that maybe they'll be able to buy lower again later. And further, what is a concern is the fact that Tether's shark and whale line is moving down. So while it's with $100,000 to $10 million in Tether, they were sitting at a high of 37.8% of the supply on September 30th. About 6 weeks later, we're now down to 36.35%. So that's a concern. Less dry powder, less stable coins, at least of the top stable coin, are being held by those key stakeholders who have the most impact to boost prices. On the flip side, we look at March and we saw this big accumulation in Bitcoin along with an even bigger accumulation in Tether. And that indicated that this bottom likely wouldn't last long. So this is the ideal setup to indicate that it's time to buy. Suddenly Bitcoin and Tether moving up significantly while prices are moving down. That's a huge bullish divergence. And right now, we unfortunately seem to have a bit of the opposite going on, where prices are moving up, but stablecoins and Bitcoin are moving down. Again, it doesn't mean that prices can't continue to climb, but historically, based on probability, this is a bearish indicator that indicates that the largest players in crypto who have the most control of the market and treat, crypto market caps as their playground to do what they want with, they seem to be moving in the wrong direction and showing less interest in pushing up prices. Quite the contrary. Social dominance, we already talked about that. It's a little below that health line right now for Bitcoin because altcoins are getting such euphoria. We discussed the high funding rates already as well. Especially this one, by the way. Look at the average funding rate for Ethereum, which we could touch on briefly. This is the highest we've seen in over a year for the funding rate. Tons of longing going on, undoubtedly due to the optimism of the new ETF that was filed specifically for Ethereum by BlackRock. And this is the highest funding rate we've seen since June of 2022. So we're talking about almost a year and a half ago. And interestingly, that happened near a bottom. It was kind of flattening out until funding rate at least dropped a little, and then we saw prices start to rise. So that's quite interesting there. Why don't we do just a very quick look at Ethereum, and then we will check out the activity matrix because I know several of you wanted to see what that's looking like at the moment. So on-chain transaction volume, just like with Bitcoin, I'm sorry, we're still on Bitcoin. I was like, wow, that looks so similar to Bitcoin. Yeah, so nevertheless, it does look very similar to Bitcoin. This is the second largest spike we've seen in the last 6 months for on-chain transaction volume, and different for Bitcoin, different for Ethereum compared to Bitcoin. Trading volume is seeing one of its highest levels of the year. It is the highest in the last 6 months. Oh yeah, by far the largest in the past almost exactly a year since we saw trading volume this high. So clearly lots of increased interest and polarization going on that's pushing and pulling prices in both directions right now. Active addresses in circulation looking pretty run-of-the-mill for Ethereum. And then MVRV, just as we saw for Bitcoin, it's actually looking a little more concerning for Ethereum. The 30-day average returns are at plus 14% right now. That's the highest we've seen since January, believe it or not. So we're right at that borderline of a danger zone, which is plus 15%. The 365-day, interestingly, is not as bad as Bitcoin's at plus 24%, but still that implies that we're a little overinflated at the moment. This is the highest the average trading returns have been since early May. So we're talking about a 6-month high there for a metric that we prefer to be low. Funding rate, very sky high, as we just saw. This is the largest in over a year. Whale transactions, this is the, let's see, 2 days ago. No, that was yesterday. This was the most amount of $1 million plus transactions on the ETH network since March. And that was during a bottom accumulation. This could be more the opposite, since the spike is happening right after Ethereum surpassed 2100. So that's a concern as well. It indicates a higher probability of a price reversal. We won't bother getting into sharks and whales for Ethereum because it can be very difficult with all of the DeFi and small addresses being created constantly there. High profit taking, and a similar mean dollar invested age curve flattening out, which I do think is a very good sign. So I'll be watching this quite closely, and we'll give updates on our Twitter, Telegram, Discord, and other handles to let you guys know if this curve is really starting to move down. All right, let's look at the activity matrix, then we'll take a few questions and begin to get toward the wrap-up phase of this call. What are we seeing in terms of activity? Well, at least on the model that I'm using right now, I added an average calculation that looks at the average days altogether for the current day and measures them from 1, which would be the hottest activity possible, to 90. And when you're talking about a broad average, you're not really going to see big extremes. It's usually going to fluctuate between 30 and 60 most of the time. And right now it's at 34, indicating the average altcoin, average asset in crypto is much more active than it's been in a while, which totally makes sense. This is the most prices have surged in a very long time, since March. So absolutely, there's a ton of activity going on with altcoins showing increases in network growth, whale transactions, active addresses, mean dollar invested age with those dormant tokens, all sorts of things going on. But we can still look at which ones in particular deserve a bit of a highlight. And if we go to this top and bottom 10 ranking list, we can see each category and what the top 10 and bottom 10 are indicating for it. We can see whale transactions across the board. Here are 10 assets, and there might even be more because this is alphabetical going from A through L. And we already see 10 assets that are having their highest day in whale transactions in the past 3 months. Anchor, Audius, Axie, Basic Attention Token, Bitcoin, boom. Cardano, boom. Chainlink, Ethereum. These are big assets, guys. Illuvium and Lido DAO, all seeing their biggest whale transactions in the past 3 months, as of the most recent full day, which ended at midnight UTC. Social dominance, we see 0x and Illuvium having their highest day. Active addresses, tons of different assets. I won't name them all. 90-day price change leaders. Look at Telor, up 692%. Chainlink has officially doubled over the past 90 days. It's above $15 at the time of this video. I remember it in the $7, even $6 range when we're talking about earlier this year. In just the last 1 day, we can see Jasmy up 19%. It had seen a ton of address or activity in general over the past couple weeks, and I had actually highlighted it. Storage up 71%, leading the way in the last 7 days. Injective protocol up 139%. That's the leader in the last 30 days. And then overall, I like this stat because it's averaging all of these metrics together and basically meshing their rankings from 1 to 90 with all 8 metrics being taken into account. And it's showing that Phantom is at a 6 out of 90, indicating that all of those metrics averaged together equals 6, a ranking of the 6th best day, which is really good. That's probably the best we're going to see for most assets. So Phantom is seeing a ton of activity. Aave, ton of activity. 0x, Pax Gold, we can see Jasmy, makes sense. It's the leader on the 1-day price. And then Litecoin up there at 14%, or not percent, 14, which is just an arbitrary ranking from 1 to 90. And I want to look really quick at Phantom, Aave, and even 0x. Phantom, you can see it, here it is in dark, dark red because the current day is almost all red for all these metrics. Tons of activity for active addresses, network growth, whale transactions. Let's even open it up on Sandbase really quick so I can really show you guys how it looks. So yeah, trading volume, let's zoom in a little bit here. As we can see, largest transaction volume spike in the last 3 months. Whale transactions, that red spike indicates 100,000. Oops, I take it back. I'm sorry. This is circulation, and it's showing that yesterday was the highest day in the last 3 months. Moving down, whale transactions for Phantom yesterday had 4 that were $1 million or more. That was the highest in the past 3 months. Even accumulation from key whales, we can see the 1 million line here. Oh, wow. Yeah. So look at this huge spike in 10 million to 100 million holdings. I guess it's at the expense a little bit of the really, really high ones. So we can't get too excited, but still, I like, these are kind of the 2 main tiers that are often active and drive markets, and they're both surging right now. Even mean dollar invested age spiking, or flattening out, I should say, and age consumed is spiking. This is the amount of coins moving multiplied by the age of those coins that were moved, and that's sky high. Supply and exchanges did move back down, so that's why it's showing that the most previous day is looking better. So yeah, I can definitely see why Phantom is being highlighted as the top asset with a ton of good spikes happening right now on its activity matrix. So that's a little recap. I won't go through everything. I'll say this: if you're looking at ones that are particularly inactive, despite the altcoin party that's going on, you can check out Phala, Gitcoin, Stargate, Magic, Cartesia, Ajo, Zell, LivePeer, StormX, and even the stablecoin TrueUSD. And that's all I'll say about it. I want to move on to this model as well, our MVRV opportunity and danger zone. Just as I mentioned, tons of semi-overbought and overbought signals. You can see Blue Zell, very overbought at the moment. Illuvium, Injective, Storage, Reserve Rights, and yeah, those are the biggest ones there. So just keep that in mind and be careful about how high the average returns are for the average traders already. If you are to buy in now, assuming that prices are just going to continue to do what they've done for the last 3 weeks or so, know that the probability of that happening is a lot less. Okay, we've got maybe 10-ish minutes or so. I'd love to take a few asset requests, assuming there are a few. Balresh, let me know.
Not yet.
No worries. I've got plenty I can look at and show you guys in terms of some of the particularly interesting assets going on right now. One thing I wanted to look at is Caspa. Now, Caspa is not an ERC20, mind you, so we only have a few metrics that we can really analyze, but clearly the trading volume is through the roof. We can see since October 15th, we're talking about 4 weeks of performance. The price has more than doubled at plus 111, 112%. And the other thing I want to see is the social aspect, which is absolutely surging. Got it, Balresh. I'll look at Ray after this. So since the end of the month, we saw social dominance down at like 0.12% for CAS. And now, in the most recent day, it went above 1%, 1.11. Not shockingly, we saw a price top right after that. The telltale sign of a top is you see a price surging or decoupling from the rest of the markets. It gets a ton of increased attention from traders, and the mainstream really picks up on that asset, which they usually don't talk about CASPA, but now they are. And all of a sudden, we see a top as a bunch of people are trying to FOMO into it, expecting that we're going to have a repeat of what we saw over the past week. So that's a telltale sign. We're going to need to see social dominance die down significantly for CASPA in order to justify that prices can continue to rise, because right now the mainstream is a bit too latched onto it. All right, let's take a look at Ray. I kept CASPA brief because we simply don't have a ton of metrics for the 33rd ranked asset in crypto right now. Radium is an ERC20, so we can look at plenty for this one. Beginning with trading volume, obviously there's a big spike. I can see that the price of it, if we just we'll look at since the end of October, the last 10 days or so, price is up 67%, so quite huge. Note for UTA traders out there, it is not a higher high yet compared to what we saw November 1st. So just this 24-hour period alone, from the 31st to the 1st, price went up 61%. Oh, 73%. I take it back. That's the actual performance spike there. So we are seeing kind of a second leg right now in terms of raised price performance. Not much transaction volume going on at all. It looks like almost none. I mean, I shouldn't say almost none. We get really weird anomalies for transaction volume, it looks like. Yeah, I'm not sure why it's not even showing up at all. That would be curious to me, because we see these spikes at like 1,024. I mean, it is a very small asset, but it's strange when it's showing zero transaction volume. I'll have to look into that more. Daily active addresses, not much there either. It's either like really high or at zero, which is bizarre. Let's see what else. Nothing on the whale transaction end. And that might be accurate. There just may not be any transactions that are exceeding $100,000 on a daily basis for Ray, considering it's a smaller asset out there. We can look at tiers here, which I think will be interesting. So it's priced at about 33 cents. We can look at sharks and whales right around the 100K to 10 million level. It's not really showing any sort of movement. The 100K to 1 million tier holds 1.3% of the supply, and then the 1 million to 10 million tier holds almost all of the supply, and it has not budged. It's just been sitting in the same level for the past year or so. The last time we saw any movement was right at the FTX collapse, where the red line moved down just a tad. But yeah, it looks like this is very heavily held by the 1M to 10M tier, and then that's it. Nothing more than that. We go down a little bit, yeah, still no movement until we get to the 1K to 10K, and it's moving a little bit down right now. Yeah, I think this is a very dormant and stagnant coin. Just looking at it, I would be concerned by just the overall lack of activity on it. I think these metrics are accurate, and they're just showing that there's very little movement among the top addresses, very little whale activity. The dormant line here, unlike Bitcoin and Ethereum, it's barely budging. The average age of Ray sitting in wallets is just continuing to get higher and older over time, indicating that dormant activity is just not there right now. Even exchange flow, I mean, this is not accurate because we just don't have supply and exchanges, so not much there. But we can look at social dominance, which You can clearly see there was a big spike right at the first top, and it's actually somewhat of a good sign that it's not being talked about as much on the second leg up. So that could be an argument that Ray can continue to rise. But it used to be talked about a lot more. I think, yeah, by far the highest spike is on January 7th when it was actually at a local bottom. And I'm not sure what the news was related to it, but that was huge in comparison to the amount of discussion it's getting now. Weighted sentiment pretty neutral, so that doesn't really need to have much of a story either way. And that's Ray. It's very interesting. This is the first time I've really looked through Ray, and it appears that it's just not very active despite its big price swings going on. So I'd be worried about that, even with its plus 10% price performance today. It's outside the top 300. There are certainly more active assets that are in the 300 to 500 range, and I'm not sure why Ray seems to get so little transactions and address activity and whale activity, things like that. And I got one final request. It looks like people want to check out VET, and VeChain is not an ERC20, so we'll keep this brief. It does look like trading volume is rising. Overall, the price performance since October 19th, these past 3 weeks, it's up a pretty good plus 38%. That's a little better than the average altcoin. If we look at funding rate, we do see that there's a lot of longing going on for VET right now. That's a concern. When we see a lot of greed and euphoria, it lends to the argument that we could be seeing a local top until it settles down. Exhibit A right here, lots of longing happening in April, and then the price drops off a cliff. Now, granted, this was a local top for a lot of assets, but in particular, you can see how hard VeChain got hit right as its longing was starting to spike. So what you want to see is a lot more shorting like this, which we were seeing right at that local bottom. And that pretty much dissipated as soon as it had this first leg up. And now longing indicates there's a much likelier local top coming up. Let's see if there's anything else. I want to see the social aspect of it. Okay, so it's somewhat similar. It looks like there has been a bit of a rise, but not significant. Social dominance topped out here at about 0.33%, certainly not a very discussed asset. You see the spike right here on September 12th for comparison, and this was close to a local bottom, and that was a much bigger sign of a turnaround. But yeah, it doesn't look like it's really being discussed to an unhealthy degree, so there's not a lot of FOMO to it. I'd say this is a good sign for VeChain. And by the way, VeChain's market cap rank is 37, so it is a very large asset that just is not being talked about much at the expense of, Chainlink and Cardano and some of these assets that have really seen a huge increase in discussion over the past week. You can see Cardano's social volume up 32%. Where's Link? Only 15%. That's somewhat surprising. I'm curious. Yeah, even in the last 30%, it's among the many assets that are being discussed less, which is surprising. Ethereum obviously was a big riser in social dominance. Matic, that's a big rise right there because they've recently surpassed 80 cents for the first time in a long time. And yeah, I think that kind of concludes our recap for today. I think the summary of the story, guys, is there's a lot of concerning signs, as there often is when you see this kind of surge. We try not to just say, oh, prices have gone up a lot, therefore it has to correct. We need to really see evidence in the metrics. And I think we're seeing that. I think there are some caution flags out there. Nothing's a guarantee, right? Trading is always about probabilities. And if you're trading based on the most likely outcome right now, it's that a correction is being pointed to by multiple leading indicators on sentiment. Doesn't mean it's going to be huge. I don't know if we'll go under 30K Bitcoin. That would be a massive correction. I don't even know if we'll see under 35K after it just surpassed 35K a couple days ago. But there will eventually be an event that causes markets to regress a little bit for the first time in a long time. And then we'll have to see how whales and sharks react to that, how the mainstream traders react to that. Is there going to be a lot of FUD? Is there going to be an ETF approval in the midst? Will there be an ETF approval as prices continue to stay high, meaning that retrace may never happen? We'll have to wait and see. But for now, I'm excited as we head into the weekend. Congratulations if you were kind of buying at that bottom level in early October. Just be cautious and be careful and know that markets don't go the same direction forever. And we'll be checking back next week on another stream. So get your questions ready and stay tuned on our Twitter and YouTube and Discord. And even our LinkedIn. If you follow us on LinkedIn, we give updates about the markets on several platforms now. So we appreciate your support. And as always, on behalf of Ballrush and the rest of the Santiment team, wishing you a wonderful weekend, and we'll talk to you soon.